Hey everyone, and welcome back to another video for today. So every 3 months, we have a chance to look at what some of these super investors have been doing. Now, the thing with these numbers and screenshots that you're seeing all over the place is that they didn't buy the companies that you're going to see on the screen today or yesterday or a week ago. These are all the moves they made a quarter, well, the last quarter. Very important to note. So yes, you might see some headlines, oh, Warren Buffett just bought this stock. Daniel Loeb just bought that stock, or maybe sold that stock. Well, they didn't just buy it right now, so I already apologize for the title of this video, but you have to make titles that work on YouTube, unfortunately. Is it interesting for us to look at what they've been doing? Yeah, maybe. Maybe it's interesting to look at where the big money is going. But honestly, it doesn't matter. So this is purely for your information and things like that. We are also going to talk about this whole Netflix, Paramount, Warner Brother situation. Because guess what? There is another spin to this whole story. So we'll talk about that after we go over some of the popular super investors. Thankfully, we don't have to talk about Michael Burry anymore. So if you enjoy these type of videos, you know what to do. Hit all the buttons, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Muchas gracias. All right, number one, we are going to start with, of course, the biggest one out there, and that's Berkshire Hathaway. As we can see, Apple is still number one in the portfolio, but it is very, very close now to American Express at number two. So Apple and Amex make up 43% of the portfolio. What can we also see here? He added to Chevron, they added to Chevron 6.6%, Chubb 9.3% increase. And remember, Chubb was that position, what was it, almost 2 years or so ago, that they were allowed to buy without disclosing it. To me, I would never understand why this is allowed, but hey. Okay, I guess when you are Warren Buffett, some of the rules don't apply to you. They reduced Constellation Brands. They increased Domino's Pizzas by 12.3%. Then, yes, indeed, reduction of 77.2% of Amazon. Does that make any sense? No, you increase Domino's Pizza, you decrease Amazon. But then again, it's just a classic Berkshire Hathaway move, right? You just don't go with tech unless it's Apple, although they've been reducing Apple over the last 2 years or so by quite a lot. So, all right, fine. New company that they added to the portfolio, it's just 0.13% of the portfolio, is New York Times. I think I've seen toilet paper more valuable than that. But again, I don't make the decisions here, so it is what it is. So basically, this is what we're getting for the Q4 quarter. Some reductions, although very small positions in the portfolio. Bank of America was the biggest one with Apple in the reduction side of things. And then we do see here some increases in, yes, I would say that the typical Berkshire Hathaway positions. Moving on to a very much Warren Buffett inspired portfolio from Dev Kantesaria, which is Valley Forge Capital Management. Yes, he did make some moves. Not a lot, but some, which we will see right here. By the way, this is a portfolio where you don't really see that much activity over time. But in Q4, I guess in Q4, he saw some attractive names at attractive prices, which if you look at the names right now, yes, the names are even more attractive today. So he did reduce Intuit by 15.2%. He did add a little bit to FICO, MasterCard, S&P Global, Moody's. Visa is close to 0.5% increase. Same with ASML, 1.63% increase in Equifax and 1.79% in MSCI. As you know, since the start of the year, all of these names have taken a hit. S&P Global, FICO, Moody's, more recently they've taken a big hit. Some of these names are actually down 20% or so. So if we look at the allocation, the rankings of the portfolio, right, you can see this right here, huge decreases in stock price. So it's going to be interesting to see what happens 3 months from now. Did he buy more or did he maybe reduce the exposure? Number one is FICO, close to 30% of the portfolio. Number two, S&P Global, 20.8% of the portfolio. Then we have MasterCard, Moody's, Visa, Intuit, a reduction here of 15.2%, still 3.32% of the portfolio. ASML is also 3%. And then MSCI and Equifax are positions under 1%. Some people look at this portfolio and they just cannot look at this for quite a long time because, yes, these are boring companies, but boring companies that make quite a lot of money with super high margins. As Emir likes to call some of these companies mafia-like. Moving on to Pat Dorsey. 10 stocks in the portfolio value of just over $1.15 billion. Number one position in the portfolio is ASML here, then Danaher Corp, AirCap, Meta Platform, Bookings, Royalty Pharma, and a new position, which is Live Nation, the entertainment company. Then we have AutoZone, Alphabet, and Enovis. So quite a lot of reductions here. Quite a lot of reductions. But then again, as you can see, in Q3, he's been reducing already quite a lot. Completely sold out of Wix in Q3, completely sold out of Semrush Holding in Q3, which is interesting because, well, Adobe is acquiring Semrush. And so if he had waited a little bit longer, he would have made over 50% more on the investment. But okay. In Q4, you can see quite a lot of reduction. Basically slashed the Google position in half. I mean, a reduction here of 49.48%. Meta by 16.5%. So clear rotation away, I would say, from these tech companies, although I still don't understand. But it is what it is. This is his portfolio. This is not my portfolio. Reductions continue, and the new acquisition is Live Nation. He did add 11% to ASML, and as you've seen, ASML is a decent position in his portfolio. So on the one hand, I guess he's going with ASML because, well, CapEx-wise, it's good for this company, it's good for TSMC, and maybe he doesn't like the CapEx increases, and maybe he doesn't like the risk, the return on investment risk for Meta and Alphabet, and that's why he's been reducing those positions. Moving on to, well, it says here Howard Marks, Oaktree Capital Management, but it is not Howard Marks anymore, and I do believe that Oaktree sold to Brookfield, if I remember correctly. Anyways, it's 53 positions here, so it's basically an ETF. $4.53 billion in value. A lot of companies here, a lot of moves. So I'm not going to go over each and every one of those. We'll just look at the activity and see what new positions they opened. So Grupo Aeromexico, new position. Rice acquisition, new position. Infosys, Onity Group, and another Rice acquisition here. Okay, that's interesting. If we look at the positions that they completely closed out, EchoStar, completely out of it, Sea Limited, completely out of it, Nabar's Industry, JBS, some, honestly, never heard of these companies. Some of these companies, of course, this is a portfolio where it's very, very diverse. It's not only in Europe, it's not only in North America. There are a lot of South American companies in this portfolio as well. If we actually go and look at the sectors, you can see this right here. It's energy at number one at 18.7%. Then we have materials, financials, industrials, consumer goods, technology is only 7.7% here. And for those wondering, Grab is still here, 1.23% of the portfolio, but he did reduce it by 7.33%. Same with New, small reduction, but it's still here, 1.65%. Nokia is actually pretty high, well, considering the rest, 2.67% of the portfolio. Moving on to François Ronchon, here as well, an ETF type of portfolio, 50 positions, close to $3 billion in value. Number one position here, 8.48% is Berkshire Hathaway. Small reduction here, but fine. You can clearly see that they've added a little bit to most of the positions here. They did open up two new positions. One is in Bright Horizon Family Solutions. That's 1.39%. And then Intuitive Surgical. I don't understand why a portfolio of, what was it, close to $3 billion feels the need to open a position that is 0.01% of it. 405, that's it, 405 shares. I honestly, I don't understand. I also don't understand these moves right here. Capital One Financial reduced by 1 share. What is this? ResMed reduced by 30 shares. Honestly, I don't understand this. He did completely sell out of Fiserv, CarMax, Align Technology, and Credit Acceptance. This is this is really something. Even Microsoft, 1 extra share here. Either this is a mistake or this is the funniest thing I've ever seen. 1 extra share increase. Why? This this is quite strange. But yeah, they really added to a lot of companies. I mean, see Alphabet, we see Disney, Taiwan Semiconductors, MasterCard, JP Morgan, Arista Networks. So it is a very, very big portfolio. And as you can see, Berkshire is number 1, then Meta, Amatec, Google Alphabet, Heiko, Charles Schwab. That's all the positions above 5% of the portfolio, with MedSpace being quite close to 5%. Moving on to David Tepper. Remember David Tepper back in, I think, 2024 it was Buy Everything China. I believe it was summer of 2024, if I remember correctly. So David Tepper, 38 stocks in the portfolio, $6.8 billion of value. Number 1 here, still Alibaba, despite a 20% reduction in that position. Alphabet, number 2 now, 8.1%. And he added 28.79% to the position. Then we have Amazon, Micron, Meta, TSMC, Nvidia, Whirlpool. Those are, let's say, the big names. We have some Microsoft here at 3.53%. He did buy a couple of new companies. So let's look at the activity list for Q4. We see 2 new companies. One is interesting, iShares MSCI South Korea ETF. First time I've seen this, so okay, congrats. I mean, we did talk a little bit about South Korea during the Sunday portfolio update, and we said that, look, the South Korean stock market has gone up quite a lot, but it has gone up just because a couple of companies have been doing quite well. It's the opposite of what we're seeing in the United States. It's the big companies that carry the index that haven't moved much, have actually come down. But in South Korea, it's the select companies, right, semiconductor memory players, that have pushed the index higher. And then the other company that they bought here is called Ball Corp. I didn't know what it is, but it is a very interesting name. So it is the world's leading provider of innovative, sustainable aluminum packaging for beverage, personal care, and household products. Now you know. Then, what else did we see here? He did sell out completely here as well of Fiserv, Truist Financial, Caesars Entertainment, Key Corp, Citizen Financials, Comerica, Block, Western Alliance, and Zions Bancorp. Completely sold out of those positions. Notable names here, AMD, a reduction of 65%, Baidu, a reduction of close to 45%, the Crane shares here, China, 35% reduction, also in JD. So quite a lot of big reductions here, China related. Very, very interesting. Very interesting. He did increase quite a lot, but those are small positions. Owens Corning, Mohawk Industries, Micron Technologies, an increase of 200%. And remember, this is Q4. Meta Platform by 62%. Imagine you're increasing your position by 1 million shares. You see, this is impressive. Not the 1 share increase or decrease that we've seen before. Also here, American Airline Group, you're increasing your shares by 4,900,000 shares. One day. Google Alphabet, an increase of 28.79%. Microsoft, an increase of 8.1%. And then the rest we've already seen. So quite a busy quarter. Quite a busy quarter here at Appaloosa Management. Moving on to David Einhorn from Greenlight Capital. Number of stocks here, also 41. So pretty big ETFs that we're seeing here. Portfolios. $2.84 billion, with the number 1 position here being by far the number 1, Green Brick partners, 20.8% of the portfolio. And then we see here Fluor Corp, Core Natural Resources, a lot of pretty boring names. If you ask me, he did buy a lot of new companies. In Q4, he bought Warner Brothers Discovery. That's an interesting move. I don't know when he bought it, but okay. Interesting, very interesting. So you can see that mostly financials in the portfolio, 27%, 13.7% healthcare, 11.7% energy, then 9.9% services. Let's have a look at what he actually sold this past quarter. Completely sold out here of Seadrill, Nexstar Media, HP, that's HPQ, and Vanek Oil Services. Okay, did buy quite a lot of companies here, as we've said. Okay, Deckers Outdoor is another one that we do know. So we do know Deckers, Air, and Warner Brothers Discovery. If you're seeing any interesting names here on the list, do let me know down in the comment section below, because if I'm going to look at every single name one after the other, we are going to be here for quite a while. Moving on to third point, Daniel Loeb. So 42 positions in the portfolio, $7.25 billion of value. Number one here did reduce by quite a lot, 31.5%. That PG&E. Then we see number two here, famous name, NVIDIA, then Amazon, Microsoft, Union Pacific, and the list goes on and on and on. What has happened with this portfolio in Q4? You can clearly see here he's been adding quite a lot of new companies in the portfolio. Chipotle, Constellation Energy, Alibaba, API Group, Spotify, Progressive, Thermo Fisher, Wix.com, CSX, and Claritef. And then the last one here, again, the last two very small positions, Ars Pharmaceuticals. What did they sell? Also quite a lot of companies. Flutter Entertainment, some of these names, man, incredible stuff. Mr. Cooper Group, okay, completely sold out of Meta Platforms, Talon Energy, Jacob Solutions, Primo Brands, Floor & Decor, Apollo Global Management, Core Scientific, okay, I guess, Community Health System, completely sell out of Meta Platforms. That is interesting. But he did then again also reduce 22, close to 23% of Amazon, 15, close to 16% of Microsoft, 61% of TSMC. So definitely here also participating, I would say, in this maybe rotation away from the big tech companies, semiconductor companies, and things like that. We here again see Live Nation, nice little increase of 27.7%. Moving on to the last two here, one is Acre Capital Management, 18 positions in the portfolio, $9.1 billion in value. Number one here is MasterCard at 18.8%. Then we have Brookfield, KKR & Co., Visa, Moody's, CoStar. So here as well, not the sexiest portfolio out there, but definitely a very strong and stable one. Did they sell any position in Q4? Yes, they did. Verisk Analytics, extremely small position for them, 0.02%. Okay, that's the only one where they sold out completely, although you can already smell the 100% sell in Danaher Corp in Q1 because it did reduce that position by 92%. As for the rest, not really. Copart, an increase of 85.7%. I do think, yeah, okay, in Q3 he also increased that position by 253%, which tells me that it is a fairly new company in the portfolio. In Q2, this was a new company that he added. FICO was also a new company that he added back in Q2 2025, increased it massively in Q3, and increased it yet again here in Q4. I assume he's going to increase it again in Q1 because, well, the stock has come down, unless maybe the thesis has changed for him or something has changed, but I assume he likes it at today's prices more than he did a month or two ago. Lastly, and that's one that we already covered, I think a week or so ago, that's Bill Ackman here, 11 stocks in the portfolio, $15.52 billion in value. So number one here, it says Brookfield Corp, 18.15%. But remember what we did before is we looked at both tickers for Alphabet and that was usually the number one position in the portfolio. But not this time, no, because this time he did reduce this ticker, which is the non-voting rights one, GOOG, by 2.53%, and the one with the voting rights reduced it by 86%. Now we do know what company he did add to the portfolio, and that's Meta Platform. That's already 11.37% of the portfolio. Amazon is 14.28% and Uber is 15.9%. He did add close to 65% more to his Amazon stake, did reduce the Uber and Brookfield by 0.21%. Not such a big deal. Then, did he sell out of something? Yes, he did. He completely sold out of Chipotle Mexican Grill. I do wonder if he still has the Nike call options. I assume he has. It is interesting to see him reduce the stake in Google. I think because, if we go back to Q2, he's been adding there. In Q1 2025, he added there. So he was pretty bullish on Google for quite a while. Maybe he feels like, you know what, we made enough money with that. We see better opportunity for the longer term, or maybe longer term in Amazon and Meta, and that's why he's been making the switch. Can I blame him? No, not really. I still own Google, I still own Meta, and I still own Amazon in the retirement portfolio. So whatever happens here, I don't care. I still believe in Uber as well, and Uber is a pretty big position in this portfolio. As you can see, the number 2 at 15.9%. So that was the super investor overview. I'm sure there are some other super investors out there that made some interesting moves. Cool, but I think this is enough. This is enough. You are the super investor. Don't forget that. Since we did end with Bill Ackman here, remember I did buy Netflix back in, was it 22? And then he sold because it missed estimates for one quarter and went down, and then it went on a huge rally. And so let's talk about Netflix.
Warner Brothers Discovery setting a special meeting date of March 20th and unanimously recommending shareholders vote for the Netflix merger, but it's giving Paramount an opportunity to negotiate a better deal. David Faber joins us now. David, all over the weekend, I saw other financial types all saying, look, there's things under the surface here going on in terms of Paramount and Warner Brothers, and something is likely to be happening. Can you make sense of what it actually means, David? If you were Kalshi, if it was David Kalshi, would your numbers on Netflix prevail? Would that be going down on Netflix prevailing?
I think it would, without a doubt.
Before they continue to explain, as you can see us on the screen, Netflix grants 7-day waiver for Warner Brothers to engage with Paramount. Why do they have to do it? Because, well, Netflix already has an agreement with Warner Brothers. Now, before they make their explanations and if the odds are going up, I'll just say what I feel right now as a Netflix shareholder. Since this acquisition was announced, Netflix shares dropped substantially, right? We're now down close to 35% or so. What we also know is because of this acquisition, they're not buying back shares anymore. Then, lastly, very important part, me specifically, I like the deal. Yes, it is not a cheap deal, but I think it's a very good one for the long-term future. Now, if it doesn't happen, as I've said before, if it doesn't happen, I hope Netflix gets paid. Because if this deal does not happen because Warner Brothers accepts a new and better deal from Paramount, Warner Brothers will have to pay Netflix $2.8 billion. That means that Netflix gets that $2.8 billion and will probably start to buy back shares at, guess what? A 30% or 35% discount. So to me, I see here win-win scenarios. The only losing scenario here is if Netflix cannot buy Warner Brothers and it is Netflix's fault, then they will have to pay, I think, $5.6, $5.8 billion or so to Warner Brothers. That would be, in my opinion, the worst case scenario.
Would be going down. I think that's reflected in Warner Brothers stock price going up this morning, Joe, as well. They've got their 7 days. Now, interestingly, as you just noted, they did not get the could lead to a superior proposal that we might have thought they would. given the enhancements that Paramount made a week ago to its bid that seemed to address many of the concerns the Warner Brothers board had. But they did come up with the 7-day. They got the waiver from Netflix. Netflix, of course, continues to have its ability to match whatever it is that Paramount does come up with and come up to, so to speak, in the next 7 days, if they do. As was made clear in the press release, one of their advisors reached out to the board and indicated if they actively engage, as I expect they will this week, they will pay at least 31, if not more, because they indicated that's not best and final. So I certainly think in answer to that question, your odds have to go down on Netflix winning and up on Paramount. How much, you can make your own guess. Oh, look, I guess we have it, right? Because, Ray, we have a partnership with them, don't we? Yeah, so there it is. It's going to be an interesting 7 days, and will Paramount be able to address not just price, but also some of these other concerns that remain? Because even though they seem to address many of them, Warner Brothers has responded by saying, well, you said one thing in the press release announcing the enhancements, but in the merger agreement you offered us, you really haven't changed very much. Now, the Paramount side would say, well, when it comes to things like interim operating agreements, we can't put that language in there. We don't know exactly what it is. We have to talk to you. And a few other things. One of the main concerns remains this overall LBO structure question. You know, that the state of the cable industry is such, and particularly for Paramount's cable networks, MTV, Nickelodeon, and the like, that things could continue to decline to such an extent that when you got to close, this would almost no longer be an ongoing entity. And therefore, how can we believe that they'll even be there at close? Or will they tell their banks to pull because they know it would just make them insolvent if they were to actually buy Warner Brothers at that point? And so they're still trying to say you got to figure something out there. What would that be? Maybe an agreement where Larry Ellison would agree to put in more equity in Paramount if, in fact, it was no longer an ongoing entity at the time of close. But they're getting closer here, Paramount.
He goes on and on and on to talk, but bottom line here, to me, the deal makes a lot more sense, the Netflix one. Yeah, I'm biased, but Netflix wants to buy the strategic assets from Warner Brothers. It doesn't need all the money-losing sides of the business. It doesn't need all of that. It needs the IP, the streaming business. It also gets some sports rights, I believe. That is the important part. That will make the Netflix/HBO business a much better business than, let's say, if Warner Brothers gets fully, all of its assets fully acquired by Paramount. Because guess what? Netflix as a standalone business is the best business out there if we compare all the competition. It is the one with the higher margins. It is the one with nice, but probably faster growth as well, good profitability. So to me, it makes more sense if Netflix does acquire what it needs to acquire from Warner Brothers than if Paramount acquires the whole company. The structure here, there's a lot of debt. There's a lot of outside investors. I think you see, of course, the Ellisons, you see Qatar, you see, I think, the Saudis in that deal. So do with that information what you want. To me, yes, again, I am biased because I am a Netflix shareholder. I also like TV shows. I also like movies. And I think HBO creates quite high quality content. But if you're asking me, it's a Netflix win-win situation right now. We will get a lot more information in the next 7 days. And then in March, we should be getting, of course, the full picture if nothing happens between Paramount and Warner Brothers. In the meantime, this is what we're getting from Netflix. Yes, they did say that it's 25% since the announcement has been made, but I believe it's more than that since the peak right around in July, actually, it peaked. So it's 42% from the peak. It's probably a little bit less if we look at the end of October, yeah, a little bit less than that. So with Netflix, I do believe that if they will get paid that $2.8 billion from Warner Brothers, I think they can put it straight into buying back shares. And yeah, we should see the stock bottom pretty soon. Anyways, this story will have an ending, I would assume, towards the end of March, no matter what. And so all in all, that's about it for me in this video. If you enjoy this type of videos, hit all the buttons. We really appreciate that. And we shall see each other in the next one. Bye-bye.